Okay, guys, welcome back. And today we have to discuss the chapter number one that is related to ethics and the accountant. Okay, this is our first lecture, and we will move on to the grade. Now, okay, here. So, what is ethic? We have to discuss this. So, let's talk about ethics, and this is an SCCA Strategic Business Reporting SBR. Sounds serious, right? But don't worry, I will keep it simple. Okay, first you have to imagine that you are an accountant working in a big company and you are responsible for preparing the financial report. And one day, your boss or your CEO, what do you call it, comes to you and says that, oh, Mr. Mr. X, we need just to adjust the number a little so we can show more profit and attract investors. Fine. Now, what do you do? If you follow your boss, you might help the company in the short term, but you are breaking ethical rules. If you refuse, you are following the professional ethics, but your boss might not be happy. So this is where ethics comes in, and as an accountant you must always do the right thing even if it is difficult. So what is ethics? If you see here, a set of moral principles guiding behavior. So this means that ethics is all about doing what is right and fair, especially in business and finances. So an SEC ethics means that accountant must be honest. What does it mean? It means that no lying or twisting numbers. The accountant must be professional. Must be professional. This means that follow rules and stay fair. Uh, the accountant must be objective, which means that you don't let personal relationship affect your work. And then keep things confidential. Keep things confidential. So don't share secret company information. And the last one is always do what right. So even if a pressure to do otherwise. For example, let's say you are working for a company and you notice that they are hiding liabilities and financial statement to make profit look higher. So an unethical accountant will ignore it or help manipulate the number. But if you are ethical accountant, then you will report editor and refuse to be a part of the fraud. So following ethics keep you trustworthy, respected, and legally safe. So this is what we need to follow. And if you are working as an accountant, and you have to follow these ethical principles. Now, background of ethics and business. If you see here, ethics in daily life, ethics guide individual behavior in every situation. So, for example, you are witness of the crimes and you have a moral and social duty to report about that crimes. This is your daily ethical duty that you have to do. Now, if you see here, if you are working in a business and you are a professional accountant, then you have to uphold some ethical values in your work. And ethical and accounting is not just about reporting crimes, but ensuring integrity and financial practices. So you have to ensure that the financial practice is ensuring integrity, and accounting should ensure that their employees follow business code of ethics. So you have to ensure that your employee, your boss, is following the business code of ethics. Now, business ethics and stakeholder company have responsibility toward multiple stakeholders. We know all about this. That who are the stakeholder of the company. These may be the employees, customer, and investor, and the government, and so on like that. Ethical businesses consider the interest of all stakeholders while making a decision. For example, here's a company cannot mislead investor about financial performance. It affects their decision. So when you are working and you are presenting the thing in a fair way, then you are not misleading the stakeholder whose decision affect that your decision, your misleading information will affect their decision. So when you are presenting the information, especially financial performance of your company, in a way that is fair and true, then their decision will not affect, and this will help the investor or the government to make a good decision based on the information you provided. Now let's talk about stakeholder and ethical responsibility. So let's say you are in charge of a company accounts, and your boss comes up and says, "Let's make a profit look bigger, so we can attract more investor." So we should being an accountant have to maintain some ethical guidelines, some ethical principle, and you have to do that the information you are providing is based on integrities. Means that be honest, don't manipulate the numbers. You have to maintain objectivity, means don't let pressure from the boss affect your judgment. You have to keep the information secret, confidential. So mean you have to maintain the confidentiality. which means that keep the sensitive company information private. And then professionalism, that is you have to follow the accounting standard and laws. And at last, I will say accountability, that your reports should be transparent and fair. For example, stakeholder ethics in action. Imagine a company is struggling financially, and the accountant, let's say that's are you, notices that some big losses are not recorded in the financial statement. If you hide the losses, investor might put money into the company without knowing the risk, and that is unethical. If you report them correctly, investor may lose interest. They will not, take interest in investing in the company. But you are being honest, and that is ethical. So uh, this is all about the stakeholder and ethical responsibility. Now, if you see here, the shareholders are those invest in the business to make profit. The shareholder wants to invest in the business and to make profit. The motto is just to make a profit. However, some avoid unethical companies, means some investors are not interested to invest in the company that are unethical, means the industry harming the environment. Some investors are environmental friendly, and they are interested in the company which are working in the best interest of the environment. So they also avoid an unethical company. They are not interested to invest in that particular company which produce harm to the environment. So businesses must balance profit with ethical consideration to attract responsible investor. So when you are working in a company, and the company should be in the best interest of the environment. If you are working in the best interest of the environment, then it's ethical. That don't go for the unethical profit. And if you go for unethical profit, then definitely the shareholder will not be interested. So if you are working in ethical ground in ethical environment, then the investor will be interested in a company, and they will attract more responsible investor. For example, ethical investor avoid companies involved in child labor or environmental harm. So some investor who are ethical, and their responsibility is to invest in those companies which working in ethical way. I mean, some investors don't like child labor or those companies which harming the environment. So when you want to attract the investor for that reason, you have to be ethical and you have to work in the best interest. And this is the ethical responsibility of the stakeholder to not invest in those companies who are harming the environment or keeping the child labor. And the other hand, we have another stakeholder that is implies. So company must pay fair wages as for the legal requirement. So the ensure the safe working environment of the company. No discrimination based like race, gender, religion, age, and hiring and promotion. So a company is refusing to hire someone due to age violates ethical employment practices. So if someone is not, if some company are not interested to hire those people because of their religion, because of their caste, because of their age or their gender, then this means that they are violating the ethical employment practices, and the stakeholder who are ethical stakeholder will not be interested in such a company. Now let's move on to another stakeholder, that is lender. Lender are usually banks and financial institutions lend money expecting interest in return. So bank and financial institution want to lend money to the company, and they are expecting return. Now lending decision depend on the financial stability and ethical business conduct. So first they will consider your financial stability. They will ensure that you will pay the money you borrow from the bank or any other financial institution. But they will also ensure that you are working or you're using the money, or you are working in a way that is ethically approved. So when you are working in ethical manners, then definitely the lender will be entrusted to lend you money. So a company must show integrity and ability to repay the debt to secure the loan. So when the company want to borrow some money from the institution, financial institution, then first they have to show the integrity and the ability, their stability toward that lender, that okay, I will pay the money which I want to borrow from you. Now a bank may refuse to lend if a company is involved in fraudulent practices. So no one will borrow money if they found you that you are working in a fraudulent way. You are just, let's say, you are not paying your taxes. So the company will not be interested to pay to lend you money, because they know that once you are not paying taxes, it means that you are working a fraudulent way. You are just want to the money which you have to pay to the government, and you are not doing this. This means that you are doing a fraudulent practices, and the lender will not be interested in such a company to lend money. Now the third stakeholder is supplier and customer. So company prefer supplier who follow ethical practices. Companies prefer those suppliers who are following. So this means that ethical practices must be from both sides, from the company side and also from the stakeholder. One of them are not follow the ethical practices, then definitely they will refuse to do the business with that particular entity or institution. Now, ethical customer, those customers who are ethical choose brands with a fair trade and sustainability policies. So now let's say you are a company here and you are not ethical, you are not working in ethical way, then your supplier will also be not interested in you, and your customer will also not interested in you. Now, if the supplier for whom you are a customer, Now, if the supplier is not working in an ethical way, then you will be a customer for that supplier, and you will not be interested to do business with that supplier. So ethics is very important, and you have to follow the ethics code. Now, for example, a retailer may only source product from a supplier who pay fair wages to their workers. Some customer, they are interested in those companies who are paying a fair wages to their workers, and they are concerned about the workers, the laborers who are working in that particular company. So the customer will not be attracted to those companies who are unfair with the wages, regarding wages to the workers. So when you are not, working in ethical ways, and you are not paying fair wages to your worker, so those customers who are interested, who are concerned with the wages, the workers, then they will not be attracted to you because you are not fair with your workers. The fifth one is government. So a company must pay taxes. We have discussed this to support the public services. Now those companies who are not paying their taxes, then the customer, then the supplier will be not interested, because not paying the taxes, it means that you are not supporting the public services. And government redistribute tax revenue to support social programs. A company evading taxes in both unethical and illegal. So if you are not paying the taxes, then mean you are working in unethical way. Plus, this is also illegal. Okay, number 6 point we have is public and environment. Businesses should prevent pollution. You are not to pollute the environment and operate responsibly. So those customer, those supplier, those other entities who are concerned with the environment, then they will not interested in your company if you are not preventing pollution, the pollution caused by your industrial companies, and you are not, if you're not working responsibly. So this is the reason that you have to follow ethics, and if you are following ethics, then it means that you are attracting the customer, you are attracting the lenders and other investors. So if environmental harms occur, company must take corrective action. Okay, if something happened from your side, then you have to take a corrective action. Like an oil company must clean up spills and compensate affected community. Now let's say you have a company and that is oil company, so you have to clean up the spill that caused by your company and compensate to those affected because of their spills. Okay, good, good. Now let's move on. We have discussed another thing, that is the accountant is an individual, and we will discuss some ethical dilemma. So uh, let's say your boss comes up to you and say, listen, we need to show higher profit to get more investor. Just adjust the figures a little, nobody will notice. Okay, and he is just like that. Now this is where your ethics come, and this is your red flag, and you have to follow the ethics. So what you should do first, you have to follow integrity, means stay honest. Manipulating financial report is fraud, the first thing. The second thing is objectivity, that you that don't let pressure from your boss affect your professional judgment. And then competence, your professional competence. So we always follow accounting standard like IFRS. If you are working in the working in the government sector, then there is APSAS that is also followed. IFRS, so this is a modified form from the public accounting entities. And then you have to be a competent, you have to keep the information, the financial data private, and don't share inside information. So it means you are working is in confidential way, so you have to maintain the confidentiality. And the last, you have to behave professionally. So professional behavior, always act in a way that maintain trust in the profession. Now what is ethical dilemma? Ethical dilemma, so imagine you are an accountant at a company that are struggling financially. Now you discover that your manager hires company debts to make the balance sheet look better. So unethical choice is you stay quiet or adjust a number to help the company. This could lead to the legal trouble if found out. If you're working in ethical way and you are choosing the ethics, then you refuse to manipulate the reports and follow professional standards, even if it's hard. It is the right thing to do. So as an individual accountant, as individual accountant, you are responsible for producing a fair and accurate financial report. Stakeholders rely on you. So you must be honest, objective, and professional. Unethical behavior can lead to financial fraud, legal action, and loss of trust. This is what is you have to do in your working. So accountant, we likely face ethical challenges in their careers. Some a common element you may be bribed. So official may offer bribe to influence the decision, pressure from suppliers, senior client or client may demand misrepresentation, financial transaction, gift, and influences. So delegate many offers give to sway decisions like voting, etc. So in some culture like Japan, gift giving is a customary business practices. Accountant must pressure to hide company losses in financial reports. This is called ethical dilemma, and this is a challenge. You have to follow ethics, and to pass this challenge when you are working in an ethical way. Then definitely it will be hard, but this is a good practices. Now let's talk about the whistleblowing. And whistleblowing means that reporting unethical or illegal activity in an organization. So accountant must report unethical practice that is discovered. However, being a whistleblower is often risky and can lead to financial losses, meaning job loss, difficulty finding work, emotional stress due to social stigma, legal consequences, breaching confidentiality may result in lawsuit. And the reason is, first you have to understand who is a whistleblower. A whistleblower is someone inside a company like you, the accountant, who exposes fraud, corruption, and unethical behavior. And there are types of whistleblowing like internal whistleblowing, internal whistleblowing, and another one is external whistleblowing. By internal whistleblowing, we means that reporting wrongdoing within the companies or to the senior management or to the board. So this means that this is internal whistleblowing. And the external whistleblowing means that reporting the wrongdoing outside the company, let's say to the regulator, to the auditor, or to the media. Now, the role of whistleblowing policy is for whistleblowing system to be effective. It must be well implemented more than just a formal procedure. Regularly updated training and awareness campaign supported by encouragement from the top management to report concerns. Many cases corporate fraud exposed through the whistleblower and not audit. So this means whistleblowing is good, but you have to be careful because this may cause problem for you. So we have discussed in the next lecture, we'll discuss about the business and social responsibility. I think we have done enough thing. And in the last, we have discussed some ethical dilemma that fully counted in a tough situation. We are doing the right thing can have a consequences. Then we have discussed the whistleblowing that is about exposing unethical practices to protect the public and maintain integrity. So all these things is all about the ethics that you have to follow ethics in your working condition in your working environment. And this is helpful for the public. This is helpful for the professionalism. If the public lose trust on the accountant or the auditors or other professional members or bodies and individual, then it will cause a financial crunch of that are disregarding the economic situation as a whole. So thank you for watching. Inshallah, we continue in the next lecture.